And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Vonnie Quinn, taking you through to that closing bell with a global simulcast. It started. Carol Massar in the radio booth. David Gura in today for Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, on a day where we see the S&P up 1% at a record high. The Russell 2000 up 3% on the day, Carol Massar. And that's all because CPI rose?
Well, you know, the expectation is what now? Yes, indeed. Check. We're going to get that rate cut come September. But as our Mike McKee and others remind us, we have a bunch of data before we get to that next Fed meeting. So hold on, everybody.
Bunch of data, and of course, the meeting in Jackson Hole as well.
Michael I'm ready to party.
He's ready to party. Data aside, he's ready to party. But yeah, a lot of data. We're going to get these policy speeches as well. So a lot to happen here before the Fed meet once again, Carol, in September.
I mean, not to pick on Carol, but why is everybody poo-pooing this report? Because everyone keeps saying, oh, just wait till we get to the next PCE thing, or wait till we get to this a month from now.
Do you really think the tariffs are all baked in yet? We have some major trading partners that we have yet to figure it out.
I don't know, but I guess, does it matter? I mean, if you're an equity investor, at least, I mean, you know, you enjoy the ride until it's over.
If inflation starts to pick up again and the Fed cuts and then they have to raise rates again, I don't think that's great policy.
Yeah. Bonnie, what do you think?
Well, exactly.
Are you on my side or Carol's?
I also think it's a little freaky that it was
Answer carefully, Vonnie.
I'm on both of your sides. And also
that's
David's side. There's three sides.
No, there's no side.
Here.
David has no
but
side.
Basically, yeah. I mean, I think it was a little freaky that it was services inflation that went up so much as well, you know?
All right, let's break down the numbers here because we do have a record day on Wall Street, but more importantly, one that I think defies a lot of expectations. The CPI report that did show inflation is still there and on a year-over-year basis still holding at levels that it's been, but a lot of now optimism about the idea that at least with it being somewhat benign, the Fed will have the room to begin those rate cuts as soon as it's meeting in mid-September. The S&P 500 ending the day higher by more than 70 points, 6,445 and change, up about 1% on the day. The Dow Jones Industrial Average making a similar move on a percentage basis. The Nasdaq Composite up about 1.4% on the day, similar move for the Nasdaq 100. But look at the cyclical sectors. S&P mid-caps up 2.3%. Dow Transports up 3% on the day. The Russell 2000 also up 3% on the day. Carol Massar, maybe potentially a vote of confidence that maybe it's safe to embrace some of those cyclical and economic names.
You almost sound irrationally exuberant, but I'm going to be very careful here.
Well, don't worry. I'll be pessimistic tomorrow.
S&P 500, folks. Most names, broad-based buying, as Romaine just laid out, 401 names to the upside in the S&P 500, 100 to the downside, Vonnie, and 2 unchanged.
You heard that incredible roar from the exchanges, right? Guys, I mean, it's incredible, the performance today. All sectors in the S&P 500 ended in the green, even consumer staples, which was lagging just that tiny little bit. One tiny sliver of red, and that was insurance companies, but even then they were down literally fractionally.
All right, guys, let's get to some of the individual gainers. Got to mention airline names in today's session, up about 9% as a group overall. We did get a read on inflation. We saw airline fares, a big contributor to the Supercore services gain, that 4% monthly increase, the biggest for this category in more than 3 years. We also talked a little bit about Spirit Airlines and what's going on with them, and then maybe that provides more business for others as they have their own struggles. So anyway, airlines definitely some outperformance. United, in fact, that stock alone was up 10% in today's session, the number one gainer in the S&P. Delta was the number 2 gainer. Want to mention the SOX, the Philly Semiconductor Index, that was up about 3% in today's session. Shareholders reacting to CEO Lip Bhutan's meeting with President Trump. The president describing the meeting as a very interesting one. He talked about his amazing story, his background, a little bit more positive. So Intel also up about 5.6% in today's session. And then AST Space Mobile, we talked about it a little bit on air. David and I did with Nora Melinda. It's a satellite firm. It's set at an ambitious plan to launch about 45 to 60 satellites this year and next year. It also said it received 2 additional early stage contracts from the U.S. government. So that one, some outperformance there as well. David, up 8%.
I'm looking at decliners. Nobody wants to hear about decliners on a record-setting day, so I'll move swiftly through these. But I am looking at a couple of healthcare services stocks on this Tuesday. A broad umbrella, so much underneath there. But McKesson's the first one I'm going to point out here, headquartered in Irving, Texas. It announced plans to spin off its medical surgical solutions business segment into another discrete company. Another healthcare services company I'm looking at is Cardinal Health, down about 8% today, buying Solaris in a $1.9 billion deal. That on the heels of a miss in adjusted operating income. I think it's down the most since 2021. Last company I'll flag here is Aon, that professional services company. A lot of action in the option space there, but we're seeing it down today as well, guys.
And we take a quick check on yields, and I think the steepening of the yield curve really tells the story of where this market's head is at. You did see short-term yields drop, the 2-year down about 4 basis points, as now the market seems to price in a much firmer possibility that we will get a rate cut in September, and that includes a 94% chance based on Bloomberg calculations that we will get a 25 basis point cut at the September meeting, and an 81% chance that we'll get a second cut before the end of the year, basically what's already been telegraphed on the dot plot. And of course, all of this has to do with the idea, the read-through, Carol, that we're getting right now, potentially from that CPI report, that the impact of tariffs may be a little bit less severe than what the market had priced, or at least the president wants to make clear that, well, that's what he thinks. And he had some choice words for none other than one of the big bank CEOs.
Yes, indeed. We're talking about Goldman Sachs. President Trump saying that the Goldman Sachs team and the CEO, we're talking about David Solomon, he criticized it, saying the bank was, quote, wrong about the tariffs and their impact on consumer prices. So a research note that was out by Goldman said the impact of those tariffs from the president on consumer prices was just starting to be felt.
And we should point out that research note was not put out by David Solomon. It was put out by Jan Hatzius.
Hobbyist researcher at Goldman Sachs.
Just want to make that clear. So, all right.
Not that he couldn't if he wanted to.
I'm sure if David Solomon wanted to, I think he has other things he has to do during the day.
You're tough today.
But part and parcel, I think, of this theme we're seeing from the president weighing in on all manner of corporate affairs. So, Carol, just a moment ago, talking about Intel, we heard the president calling for the resignation of that CEO a few days ago. Here he is going after Jan Hatzius, not by name, David Solomon as well, taking a, shall we say, more muscular role here than previous presidents have in kind of advising large American companies on the way they should conduct.
Yeah, I mean, he doesn't
business.
like not getting credit, does he, David? He literally said David Solomon and Goldman Sachs refused to give credit where credit is due, and he, tweeted that out well before he said that David should go and get himself a new economist, or maybe he ought to just focus on being a DJ and not bother running a major financial institution. He's just the next CEO in the crosshairs, right? I mean, will we be seeing him visit the White House, David Solomon, like it was Le Boutin just the other day?
It gets to the idea, though, too. I mean, we talk about a market at record highs, at least for the S&P and the Nasdaq, and the Russell looks like it's trying to claw its way back towards it. But your point, David, about this, the interjection, if you will, by the president and the White House into so many things that, at least in the past, it would have just been left to its own devices. Let corporate America do its thing, as long as, of course, they're not breaking the law or doing anything unethical. But now with his sort of finger on the scale, whether it's with Intel or the latest comments about Goldman Sachs and David Solomon, does that become a potential market risk, a potential headwind going forward?
For sure, a question. Let's just bring you Rigetti earnings really quickly, because of course this is the quantum computing company that really had the market's attention there when it did a demonstration just about 3 or 4 weeks ago, and the stock price shot up and we had a bunch of price targets come out after that. The operating loss wasn't as bad as anticipated, $19.9 million. The estimated operating loss was for $20.9 million. And then second quarter revenue, $1.8 million. The estimate was $1.87 million. So slightly shy on revenue, but again, a better operating loss than anticipated. That stock has been rising in recent sessions.
Can I just say, Romaine, I think you're right. And I think David's right. Like this idea that CEOs have to be...
We'll take it, both of us. Yeah.
No, but I think they have to be so careful, right? It's almost like nobody wants to be caught on the president's social feed. And because you don't know, we do see stocks move on it. We certainly see, we end up doing segments on it because there is concerns about what that might mean in terms of regulatory or oversight. I don't know, but it definitely is tricky for, I think, companies and CEOs.
Yeah, and we should point out, we've been talking to a lot of folks today about this CPI report, and they also point to this idea of the resiliency right now of corporate America, the idea that the bottom lines for a lot of these companies are holding up, and we continue to get our earnings crossing the wire. We have H&R Block, of course, this is the tax prep company. Those shares actually moving lower in the after hours trade. The company in its fiscal fourth quarter did report a slight beat in revenue of about $1.11 billion. But on the EBITDA basis, basically the bottom line here, the company says that it's looking at about $413 million, and that's slightly below what the street was looking for. The company did increase its quarterly dividend and did provide a fiscal 2026 forecast for revenue of $3.88 billion to $3.9 billion. The street was looking for a 3.83. Who's next?
I don't know. We're waiting for CoreWeave. It's just... CoreWeave is actually crossing, so let me just start with that if I can, guys. Second quarter revenue, we're just getting one number so far, 1.21 billion. The street estimate is 1.08 billion, and we're seeing CoreWeave already a pop about 2.8% here in the after hours. Second quarter loss of 60 cents a share. The estimate on the street was for a loss of 46 cents, so that seems a little bit larger there. And second quarter adjusted EBITDA margin remained 62%, slightly better than the street estimate of 61.9, pairing some of the gains, but still up about 2.2% here in the aftermarket. Something that we've been watching certainly for the results of this company.
Also keeping an eye on Lumentum. It kind of makes lasers and optics they kind of use in data centers and in the AI space. Those shares moving higher in the after hours trade after reporting a beat on the bottom line for the most recent quarter, 88 cents a share. The street was looking for 80 even. Net revenue also coming in above estimates at roughly about $481 million.
All right, guys. Yep. Thank you so much. That is a
Thank
wrap.
you too, Carol. and thank you, David.
Thank you, Romaine. I appreciate it.
Yeah,
Well done.
absolutely.
Well done.
I'm always on your side. So.
Wait, what?
Wow.
Out of here.
I love
Out of
this
here.
guy.